Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So welcome to the session, and once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, J-Squad. Thank you for joining the session. Hello, Ambrose. Thank you for joining. So today is a very interesting day. We don't have a lot of data coming up in the economic calendar, and this basically makes it a price action traders territory. So with this in mind, we'll be looking at the key highlights for the day. And once we go through these, then we do some technical analysis and try to understand what chart patterns are currently present and where the key price levels lie for the day. So let's start with the economic calendar. So as you can see, today is Thursday, the 16th of November. So it's just 2 more weeks before we get to the last month of the year. So the very first data point late this morning at 2:50 a.m. was core machinery orders from Japan. It was low impact news, but you can see the improvement here from the previous reading of negative 0.5%. And this is an increase to 1.4%, meaning that machinery orders in Japan are currently on the rise. So Japanese trade balance slightly worsened from the previous reading of negative 0.42 trillion to negative 0.46 trillion, which was better than expectations. Then we had the MI inflation expectations in Australia, which increased from 4.8% to 4.9%, basically indicating pessimism, or basically the respondents of the survey showing that they're expecting inflation to be on the rise over the next 1 year. So then we had the employment data coming from Australia. And in this case, the previous month, we saw a 7.8K monthly change. But then in this month of October, there was a big number, which was 55,000 jobs created in the Australian economy. And this was a quite big surprise because it's more than double the expectation. And of course, the unemployment rate moved from 3.6% to 3.7%. So we had the data for new home prices in China. Previously, it was negative 0.30, and now it went even worse to negative 0.38%, basically showing that the housing market is decelerating. So tertiary industry activity in Japan came in at negative 1.0%, and this was a huge drop from the previous reading, which was 0.7%. So going on for the rest of the day, we are going to be having a couple of speeches. One will be from FOMC member Cook, then from ECB President Lagarde, and of course, FOMC member Barr will be speaking at 3:10 p.m. So at 4:15 p.m., we'll be looking at housing starts in Canada. And then the most important data points will be coming up at 4:30 p.m. So if in case you haven't noticed over the last couple of days, a lot of news that would normally come up at 3:30 p.m. has now shifted to 4:30 p.m. And this is as a result of the 1 hour adjustment in daylight saving time. So the big news that were coming up at 3:30 are now coming up at 4:30 p.m. So in this case, we'll be focused on the unemployment claims. This is a weekly data report showing the number of people who filed for the first time for unemployment insurance. And in this case, it's a good indicator of the job market conditions in the US. So in the previous reading, we had 217K, and in this case, we're expecting 221K. So looking at the line chart here, you can see that overall, since June, we've had this huge drop in the unemployment claims. But then over the last 3 weeks, there has been a certain increase in unemployment claims. So when there's more people filing for unemployment insurance, it basically means that the job market is softening. And in that case, consistent with the Fed's expectations. So if we see even higher unemployment claims, then that should be leading to a much weaker dollar. So at the same time, there will be more news being released. We'll be seeing the Philadelphia Fed Manufacturing Index, and this is expected at 4:30 p.m. So in the previous reading, it was negative 9.0, and we're expecting this to ascend to negative 10.4. So just for comparison purposes, yesterday, we had a similar data, and this was New York, or basically Empire State Manufacturing Index, which came in at 9.1. So even though it showed some strength in manufacturing in New York, the other data showed weakness. We had weakness in core producer price index, weakness in core retail sales, which came in at 0.1% from 0.8% in the previous reading. So producer prices month over month were down negative 0.5%, also showing weakness, and retail sales were down negative 0.1% from a previous reading of 0.9. So the overall data yesterday at 4:30 p.m. was showing weakness that was consistent with the Fed's expectations, basically leading to a much weaker dollar. So even though the dollar was trying to make a recovery, there was this period yesterday in the afternoon where it started weakening again. So today, as we look at the Philadelphia Fed Manufacturing Index, we'll be trying to get a broader understanding of manufacturing conditions in the US. So I think in terms of manufacturing, the industrial production month-over-month data at 5:15 p.m. will have much more impact compared to just one state. So in the previous reading, it was a 0.3% increase, and now we're expecting negative 0.4% decrease. So in this case, showing a slowing down US economy. So we'll also be looking at import prices month over month, and this will be happening at exactly 4:30 p.m. So this is the period around which we should be expecting most volatility in the markets today. And then later on in the day, we'll have a couple of more speeches, one from FOMC member Williams, FOMC member Waller at 6:30 p.m., then FOMC member Barr at 6:35, then MPC member Ramsden for the UK at 6:45 p.m. So these speeches, they don't normally have a big impact in the markets, but whenever these Fed members basically share important news regarding monetary policy, especially when that is hawkish news, then in those cases, it can cause some increased volatility in the markets. So with that in mind, let's get straight to business and now try to understand what key trends we'll be expecting in the charts. So hello, Richie. I can see Leonard in the house. Haki, I can see Steven, Agnes, Jiro, Paul, Frank, Takeout. Thank you guys for joining the session, and good morning. So if you have any questions, if you have any concerns, especially about the markets, feel free to type that in the live comment section, and I'll be responding to that as we proceed. All right. So we'll be starting as usual by focusing on the dollar index. The dollar index has been on quite a journey after hitting the high of 106.945 back on the 1st of this month. We have been seeing a gradual decline. Then we saw some form of recovery happening here. Then, of course, last week after the, on Tuesday, after the CPI news, we had the sharp drop. Wednesday being yesterday, the dollar was pretty strong, attempting to make a recovery. Then we had the news at 4:30, where it basically spiked up and then moved back downwards. But then the overall trend seems to be some form of recovery in the dollar index. And this will be a key and important theme for trading today. So while we have seen a lot of news indicating that the Fed may not go for another rate hike, there's also this overall idea that the dollar is currently pretty strong, backed by what's happening with the bond markets. So it's very important to understand that concept that it's not just the data points but it's also the bond markets determining the direction of the dollar. So if you look at US Treasury yields, we'll see how they are performing. And this is an important data point. So for the 3 month, even though the yields have been dropping, if you look at the current yield is 5.39%. And this is risk-free money for a majority of investors, especially institutional investors that have large pools of funds and large cash reserves. So they tend to put these in treasuries. So if they're getting 5.39%, this is still quite attractive, especially considering they were getting around 1.82% during COVID. So this is quite a good yield for them. And it's driving a lot of demand. And in this case, driving out of dollars out of circulation. So the 6 month is yielding 5.41%. So in this case, also quite a good return. 1 year, 5.24. The 10-year bond is at 4.5%. And of course, the 30-year bond has slightly dropped from 4.74 to 4.66, but still quite a significant yield. So the effect of these is basically leading to more dollars running out of circulation, which is basically strengthening the dollar in the currency markets. So with that in mind, we expect that the dollar index will start to recover against this big sell-off. And perhaps at least towards the end of the day, we will be seeing the dollar index retesting 104.655. So with this expectation in mind, then there's this likelihood that we could be seeing other pairs are giving back some of the gains they made last week. And in this case, I'll be starting with pound USD, which is currently on a big, strong bearish momentum. So after the events of Tuesday and the big rally that happened, you can see that Wednesday we followed back down. We go to the first target here. And in this case, remember, we are moving back downwards. So after the market hit this high here, notice that the first target was on this previous area here. And now after breaking that level, then we get to the next target. And of course, the target is 1.23359, which is an important level for the UK pound. So main reason we are using this area here, it's because it was the previous high here. And this was on the 11th of October. So we are seeing some continuous drop here, basically the pound erasing the gains. And as a result of this, we are basically having an expectation that this could continue dropping for the day. So in this case, for USDN, this was the most obvious of trades. So after the big sell-off that happened on Tuesday, yesterday we saw a very strong momentum back upwards. And right now, as we speak, we are basically trading above 151 yet again. So ladies and gentlemen, there's a good opportunity here. As the dollar recovers against the yen, we know that fundamentally, and we've been talking about this earlier, the yen is weak, and there's nothing the Bank of Japan can do about it, especially except trying to manipulate the markets like the way they did here, and of course here. So in this case, investors are betting strongly against the Bank of Japan, and now we are headed back to the previous high of 151.7, and of course 151.920. So in this case, there's this expectation that the market will continue rising and get to this level eventually. But as I've always insisted for the last, I believe, 2 years, as you go for these trades, as they get higher and higher above the 150 price level, then you should be very concerned about what the Bank of Japan may do. So you always trade this pair with a tight stop loss. So in case the Bank of Japan decides to intervene, you exit with a small loss. But then if they don't, then you continue enjoying the bullish trades. And this has been the order of the better part of the year. So whenever there's a big drop, the market quickly recovers. Big drop, quick recovery, big drop, quick recovery, big drop, quick recovery. And it's still the same thing this week. So we could be ending the week on a high. So don't, despite having this big sell-off on Tuesday, the market could completely close that bearish momentum and maybe close with some positive at the end of the week. So we also have Euro USD. In this case, we had the big spike, market broke above the trend line. So from the 4 hours, this is how it looks like. But then once it got to this resistance, we are seeing the market gradually drop back downwards. So it's not as aggressive as the other pairs. So for this one, I would be monitoring the consolidation and trying to understand the direction of the break. So it's easy to assume that this has been the trend line depicting the resistance in this market. And if you were to do something more on the lower side, it would probably be in this shape, something along these lines. So in this case, we just monitor and see if there's evidence of a break. And once that happens, this could present a nice trading opportunity for Euro USD traders. So for USD CAD, we are seeing the dollar recovering against the Canadian dollar. So after trading within this triangle, making a huge drop on Tuesday, we didn't quite get to the lowest of lows, and this is the most recent low. We didn't get all the way down here. So notice how the market changed direction yesterday, and today we are seeing some bullish momentum. So perhaps this will be serving as our bottom. So if I was to draw this trend line, you can see that there's 3 points that are coinciding with each other, indicating key level support. So from this area up to this area and then this area, then you can see how the market reasonably bounced from this trend line. So from what we are seeing in the 4-hour chart, there's a good likelihood that we could be seeing the USD CAD make a recovery. And of course, if you are talking about targets, there's still more room for upside, and the market could eventually get to 1.37835 towards the end of the week. So as for now, we are basically stuck in this area here. So I'll try and highlight it. So the market is basically struggling to break this area here. Notice how it was acting as a resistance. But then once we break free of this zone, then there's a high likelihood we'll be seeing some far more upside and perhaps even a rally all the way up to 1.37835. So this could be in the books as we approach the end of the week. So as for gold, we had a clean break. So from the 4-hour chart, this is how my trend line looked. So the market majorly made a break towards the upper side. So it was a very strong and bullish momentum. So our first target was here, was here at 1953. Then gold kept going up, hit the second target, which was 1969. And of course, the third one was 1975. So yesterday, it slightly hit 1975 before dropping back downwards. So today, we are seeing continued or increased momentum towards the upside. And we could be seeing some further upside happening in gold, especially as we approach the end of the week. But then if the dollar was to prove to being so resilient, then we could be seeing something completely different. So in this case, what we are looking at is a market that was basically moving downwards and has now changed direction and is now moving upwards. So from this trend line here, we can see the other one here, basically showing us the direction that the market was taking. Now, if you look at the current price action, it's completely different. So what we are seeing is the market now forming higher highs as well as higher lows. So from the most recent low here, we can see that a trend line is emerging, and in this case, gold is attempting to form higher highs. So from this high here to this high, sorry for that, needed to use a trend line here. So from this to this to this, then what we are seeing is more of a rising wedge. So market going down and then up, down, up. And the volatility is getting thinner and thinner. So the potential for a break downwards is also prevalent. So we could be seeing this playing out, market going up, finding low volatility and eventually dropping back downwards as the dollar recovers. So in this case, even if we are seeing some strong bullish momentum, there is a high likelihood that we should be looking for something along these lines. So looking for shorts in gold could be an interesting idea, especially once it gets to this upper trend line. For AUD-USD, remember, this is the pair with the big news early this morning. So after the head and shoulder formation, bearish momentum, failing to hit the target, and then bouncing off strongly towards the upper side after the news on Tuesday, we have seen the market respecting the same resistance yet again, dropping, retesting the area, and kept going down early this morning. So as a theme for the day, we could be seeing this previous level acting as the support. So it was a resistance then, but then it could be working as the support as we approach the end of the day. So a very interesting idea looking at 0.64469 for AUD-USD. So for US equity indices, the most bearish one yesterday was the Nasdaq. So from the daily chart, you can see the kind of candlestick that we printed yesterday. So this basically means that there was a rejection of higher prices and prices closed lower than the open. And this may be indicative of a market that is losing momentum. So from the 1 hour chart, you can see it was a slow incline, followed by this candlestick and a rejection of higher prices, then a slow decline towards the end of the day. And today we don't have as much volatility. So in this case, an expectation of a potential reversal is shaping up. So after the market basically hit this previous high, we are seeing a rejection and potentially the market could be dropping back downwards. So it's also very important to notice that the Nasdaq has made so much gains in a period of 3 weeks. So I'll try and use this. Okay, let's use the 4-hour chart, and then we visualize the last 3 weeks. So in the last 3 weeks, we can say right from the opening here up to the current price level, that the Nasdaq is up over 10%. And if we consider yesterday's high, so yesterday's high was here, early this morning, trying to measure this. So the price action for 3 weeks is about 11%. So in this case, in comparison, if we look backwards, you'll notice that it has taken quite a number of months, right from July all the way down to October. The Nasdaq was down 11%, and all this price action was recovered within 3 weeks. So this basically showed a very strong momentum. And now that the market has hit that resistance, and it basically means that we are currently trading very close to the high of the year. And of course, if you go to the daily chart, then you notice that the Nasdaq had an all-time high at this price level around 16,776. So right now, if the Nasdaq was to rally by, let's say, 5% or even 6%, then it would basically be trading at an all-time high. So that's the confines within which we are operating as we trade the Nasdaq. So in this case, we can already see some bullish momentum coming in, but it's not much to go by. If you look at the sizes of these candlesticks, they don't indicate any kind of optimism. So in this case, we basically chill out and wait to see the direction of momentum. So direction of momentum can sometimes be easily tracked by looking at the size and shape of candlesticks. Case in point, in this case, when the Nasdaq was moving upwards after the news on Tuesday, you can see that these candlesticks were relatively weak. We didn't have any major candlesticks with a big momentum. And then the market goes up, and then in a span of 15 minutes, it forms this candlestick, which basically shows you there is a big incoming volatility. And of course, basing on the close of the candlestick, it shows it was the bears entering the market. So right from this moment, notice that towards the end of the day, the Nasdaq kept going downwards. So in this case, we could be practicing a similar idea. So we keep observing these candlesticks until we see the first big momentum candlesticks, and perhaps that will give us a direction for the Nasdaq. And the same is true when it comes to trading the US 30. and of course the US 500, which is basically the S&P 500. So in this case, we don't have much of a momentum, so it's more of a ranging market. So if you think of these as sideways momentum, then we wait until we have a clean confirmed break to identify our trading buyers. So as for UK oil, we had a nice trend line holding support. So the market was forming higher lows and higher highs. And this was in the last 5 days. Then yesterday in the evening, we managed to have a break towards the lower side. Market tried pulling back this morning, but then the bearish momentum seems to be pretty strong. And of course, as we always say, if there's a break in this case, then the target is usually the base of the pattern, and this bullish pattern started from this point here. So in this case, the expectation is that the Brent oil prices continue dropping and eventually get to $79.151 per barrel. Help us interpret the employment claims data kindly. With CPI news, we nailed it. Thank you. Hello, Francis and Brian Kanini. So let's keep going. So for Brent oil, I expect some bearish momentum. European equity indices also made a nice and clean break towards the upper side after this US CPI news on Tuesday. So since then, we are seeing kind of a similar momentum and acceleration upwards followed by a cooling off. So in this one, I would be monitoring from the 15-minute chart and trying to understand the price action that may result from this kind of consolidation. So personally, I would be watching these areas here to see if there's any signs of a break, and that would give me a direction to trade. So a clean break downwards, I trade back with the short selling positions. And of course, a clean break upwards, then we go for long positions, targeting even higher prices. So as for the USDCNY, we had this channel developing. Market broke during the news on Tuesday, kept going down, and now we are seeing the dollar continuing to lose against the Chinese yuan. So perhaps we should be seeing this pair retesting yesterday's lows. So some further bearish momentum is expected. So as for the EU 50 cash index, what we are seeing here is basically a market that was literally consolidating. This morning attempted to go downwards and then upwards. And from what I can see here, it's nothing much. We don't have any major candlesticks, which basically implies that we are still trading in a low momentum environment as the market awaits the next key driver. So in this case, I don't expect much to be happening unless a break outside these levels eventually happens on a high volume. So Bitcoin made a strong recovery yesterday. So after pulling all the way back, it made a rally, got to that 7,961. But then upon getting to the same resistance, there was a huge rejection, and now we are seeing it trading downwards. So perhaps the direction for the day will be bearish momentum, and this could drop further back downwards. So as for the New Zealand USD, you can see the correlation with Audi USD. So a big sell-off after getting to this resistance, and it keeps going back downwards. And of course, the expectation is that this bearish momentum eventually gets to 0.59288. So when you zoom out, you'll notice that you are trading in this sideways momentum. We had 3 consecutive highs being formed here, and now the market is on a downswing. So I expect some further bearish momentum on this pair. Then for USD trading against the Swiss franc, here we can see the big sell-off that happened on Tuesday. Then in this case, from the 15-minute chart, what we are seeing is a consolidation where the market was attempting to push further down, back downwards. But then we can see the USD making a strong recovery, and eventually we have seen a break happen. So the break is towards the upper side, but the volume is not very promising. So in this case, it's better to be a little bit more patient and then wait until you see high impact candlesticks showing strong price action in that direction. So in this case, I expect to see some strong momentum, And if that is evident in the markets, then that would warrant a bullish trade. But for now, it doesn't make any sense to enter in this kind of consolidation. So in summary, I believe in a price action traders territory where we don't have much news, then we play with the existing trends. And I think the most potent trade for the day would be USD making an impressive recovery after the Tuesday sell-off. So in this case, some further upside momentum would eventually get us to 151.7 and perhaps even further to 151.92. So another key idea is pound USD, where the pound is continuously losing to the dollar. So in this case, potentially dropping to 1.23359. Then as for gold, we are seeing upside momentum. I don't think this is going to stop right now. So we could be seeing some further upside. So the idea is to either continue trading higher or wait until the market gets here, and then we look for evidence to go for short selling positions. So besides that, I think we don't have any other key highlight. Yeah, we also have the key highlight in oil. This is also a very important potential trade where we have this break happening on this 1 hour chart. So market dropped and closed here today, an attempt to go up, followed by some further downside momentum. So I expect the sell-off to continue below $80 and at least get to the bottom of this pattern, which is $79.151 per barrel. So that's it. Thank you for your time. I appreciate you all. Also, feel free to check out the latest episode of the Bullish Banter podcast. And from then, you should be able to understand quite a number of things, especially in the life of a trader, as well as fundamental analysis. So there's quite some good content that will benefit you in understanding the current market events. So at the same time, notice that I made an invite for the 24th of November. We'll be having a very interesting party at as we celebrate reaching the 1 million milestone for our financial literacy drive. So in this case, I invite you all to participate. You should find the link in all our socials and make sure you reserve your own seat. So thank you very much, guys, and I hope to see you on the next session.